Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for Wednesday, June the 24th. We're also going to be doing our midweek review in reference to the markets. Let's quickly jump to our news items for this week so far. Today, Wednesday, we have nothing on the docket in reference to news this coming trading session. It gets a little heavy tomorrow, but again, most of the reports all happen before 8:30. The only one that we need to be concerned with is on Friday. Obviously, I'll remind you of that on Friday morning. The revised end consumer sentiment, but we have some really heavy-hitting reports coming in the next couple of days, including unemployment claims again, and we have some personal spending. That's going to be interesting to see what kind of personal spending is going on within this pandemic and the reopening of the states. Let's quickly jump to our analysis. We begin with our daily chart. And as you can see, more of the same. Market is just simply consolidating in this area here, just continuing after it bounced off the 200 SMA. It's between these ranges here. The market just continues to churn between those two areas. Volume has been pretty good. We're averaging 1.4 million, which is great. The ATR is holding a steady above 70, so it's good. I mean, the market just continues to just churn between areas. It's still trying to digest a lot of the information coming through. I think another positive jobs report at the end of this month will probably close the deal on the direction of the market. And also, if we can see a little stabilization of the number of new people claiming to have the virus. So it'll be interesting to see. In the short-term run, you just have to continue to trend the market. Wait for the key breaks. Wait for the key breaks of key areas. I'm going to show you a couple today so you can keep your eyes on as we go through our analysis. Let's go back to one of our second time frames here. And as you can see, market is within this range here. It ran up, hit a top, and basically the market is within these ranges. This is the low part of the range. This is the high part of the range. A lot of the activity is happening right in between here right now. And that's what we see in this market. We have several levels of support to the upside. Remember, we broke down from this particular channel here. Market is basically retesting this break. Here's where it broke eventually. Here's the market pretty much retested it again, and it also went to the downside. So we have it. We retested it and failed. Retested it and failed. So we've tried it a few times. Now we got to probably come and retest some of these bottom areas here. These swings just as a stress test before probably continuing higher. Now, let's look at another chart here so you can see closer to our trading. So you can see the plan for this morning. Okay, so here we are. Here's where we are. Blue line represents the intraday high. Pink line represents the intraday low. The inside lines are just a volume profile. And as you see right in here, you see the market clearly broke below after it tried to continue and rally higher. Market clearly broke this area strongly. You can see a nice channel here. Market breaks, swings between here, breaks clearly, breaks below this trend line once again, is retesting that trend line again. If we remain above this trend line, we're expecting the market to continue higher to potentially retest this area here or somewhere between here and here. It's going to go somewhere between here and here if it cannot break this trend line. If it breaks this trend line, then the next levels of resistance of support are going to be much lower, including this FOBO area here. So as far as trading today, we're looking to counter trending. We're going to be counter trending from here. If the market breaks this level here, we're going to be counter trending to this particular range here. If the market fails, then of course all bets are off and the market wants to move lower, potentially trying to retest this. Now, things are not happening quickly. You have to adapt to the market movement. It's slow at times, very slow at times. Then it has these huge spikes of movements, but there is not that type of just what I like to call efficient movement in the market where you see clear runs, clear retracements, continuations, higher highs, higher lows, or lower lows and lower highs. There isn't that type of market going on right there. It's a very indecisive and choppy market in some respects. Now remember, there's a dichotomy happening here where you have markets with high value, because 1.4 million average in the month of June is pretty high, going into the 4th of July weekend in a couple of weeks. So you have summer on the one hand, and then you have also volume on the other hand. So you have this really weird market where you have enough participants but not enough willingness. So remember, summer is summer. You're still going to see people staycationing. You're going to start seeing people take days off and so forth. The volume should start tempering off a little bit unless we continue to receive these positive news in the market. We continue to receive these market moves in the market. I think the market continue higher. Now, the market is in no mood, again, to break through these resist support levels and head to that low from the low back in March 23rd. I don't see any appetite for that right now. But I do see market waiting for some more positive news, more conviction in our economy that things, in spite of the fact that we're having a few increases in the coronavirus, that we can see obviously some good reporting in reference to our economy. Take care, my friends, and have a great trading session. Let me know if you have any questions.